Hello friends, today we will explain the taxability of the sales of shares which falls under long-term capital gain. The taxability will be explained on long-term capital gain earned in the financial year 2024 से 25 आई assessment year 2025 से 26. First, we understand when an asset becomes long-term capital asset. If shares listed in the stock exchange are sold after 12 months and shares not listed in the stock exchange that are unlisted securities are sold after 24 months, then an asset will be considered a long-term capital asset. Now, let's understand the same from an example. Suppose Mr. A purchased 2000 shares of MSABC Ltd listed on the stock exchange on the 10th May 2023 at the rate of ₹100 per share and sold all 2000 shares on 18th of August 2024 at the rate of ₹175 per share. In that case, the date of sale is 18th August 2024 and the date of acquisition of shares is 10th May 2023. So the period of holding in this case is 15 months 9 days, which is more than 12 months. Since holding is more than 12 months and shares sold are listed in the stock exchange, it will become a long-term capital asset. Since we have understood when an asset will become a long-term capital asset, now let's calculate capital gain based on the example discussed earlier. Long-term capital gain will be ₹1,50,000 only, which will be calculated by deducting the cost of acquisition from sales consideration, which will be ₹3,50,000. 2,000 shares at the rate of ₹175 per share. Sales consideration less cost of acquisition ₹2 lakhs, 2,000 shares at the rate of ₹100 per share. As we have calculated capital gain, now let's understand the taxability of a long-term capital gain of ₹1,50,000. As per provisions of the Income Tax Act, 1961, if long-term capital gain on the sale of shares is less than or equal to ₹1,25,000 in financial year 24 to 25, assessment year 2025 to 26, then no income tax will be levied. If long-term capital gain on the sale of shares is more than ₹1,25,000 in financial year 24 to 25, assessment year 2025 to 26, then income tax will be levied depending on when sales happen, that is, if the sale is done before 23rd July 2024, then tax rate will be 10%, and if the sale is done after 23rd July 2024, then tax rate will be 12.5%. Surcharge and cess will be levied as applicable. So, in the above example, a tax of ₹3,125 would be levied, that is ₹50,000 multiplied by 12.5%. In case shares were sold before 23rd July 2024, then a tax of ₹2,500 only would be levied. On reporting, the assessee needs to report their capital gain in their income tax returns by filing the applicable income tax return (ITR) form. Thanks for watching. In the coming topics, we will explain treatment in case one incur long-term capital loss on sale of shares. For more information and updates, like, subscribe and follow our page.